Hello everyone, welcome back to my channel. So this video marks the beginning of the week number 59 in this road to 100k realized return challenge, and I have an announcement to make right off the bat before we go to the actual content of the video. Is that from this coming Thursday onwards until the end of the week, I don't know if I will be able to input any trades for Thursday and Friday, as well as I'm not sure I will be posting during the weekend, because I may not be available to do it. And so keep in mind that either the video to conclude the week on Saturday, which was supposed to go live on Saturday, may not occur, or if it occurs, it's going to be later, either late on Saturday or perhaps even Sunday. I'm not yet sure how my these coming days are going to pan out for me, but I expect that at least the trading, which was supposed to be done on Thursday and Friday, will perhaps it may not be done at all. And so because of that, I'm considering on Wednesday making some trades with a maturity until the end of the week, so that we keep some market exposure and we keep some premiums, keep collecting additional premiums related to those days. But I will have to wait and see how things go. But for the time being, this is as much as I can disclose at this point. Now, on to the main point of this video. The week started, I would say, quite unremarkably. Basically, the market is on waiting mode because on Monday there is nothing relevant happening, but all eyes are on Wednesday because of the producer price index. Both the core and the producer price and the regular producer price index, as well as the year over year, the headline and the core. And on Thursday, for the headline and the core CPI. And so these are also very important because they will be strongly considered in the actual decision that the Fed will do later this month in the upcoming meeting to discuss and eventually decide what's going to happen to the interest rates. But yeah, because that's why for the time being the market is very, very quiet at the moment. And that means that for us it's very good. As you can see here, in terms of the trades that we've been able to do, we started today by selling 12 puts with a 237 strike price on IWM. We collected a reasonable premium. I think it's safe to say it was a pretty good premium, which of course totals $384. And also, but even though I had to compromise a bit on the probability of profit, so it was 83%. And right on cue, as soon as I sold the puts, and I can show this here, as soon as I sold the puts very early in the day, the IWM immediately came down to around, it reached a low point of 236.42. So that means that the puts were by quite some margin in the money, but the market recovered shortly after and remained above 237 for the rest of the day, and that allows us to our puts to become almost worthless. And at that point in time, we managed to sell them to buy them back at 1 cent. So we already realized this profit, and here that means that we managed to collect overall, now net of commissions, Around $364, which gives us an annualized profit of 46 and 74%. And immediately we took the proceeds from the collateral of these puts to sell 5 puts on the QQQ with a 577 strike price. Again, a very healthy premium we managed to collect, even though the stock at the time was trading at 578 almost exactly, and we just sold $1 down at 577. But even though, despite the apparently short distance between the stock price and the strike price, the probability of profit was still significant, around 88%, which means that the volatility is quite low at the moment. But despite this low volatility and the fact that the trade was done at a very late stage in the trading day, as you can see here at 9:20 p.m., so less than an hour left until the end of the session, we still managed to collect this premium, which was very, very good. And so, yeah, most likely these puts will expire worthless, and by doing so, we will collect an annualized profit of almost 11%, and overall we will collect just for this day's day a little bit over $450 net of commissions, of course, which I would say it is a very good take for the day, given the fact that, of course, we are selling puts, so we are trying to be very conservative. We are not selling calls, and with the calls, especially when we try to break even, and given the proximity between the strike price and the stock price, premiums tend to be very, very significant. But yeah, given how conservative we are, uh, I would say this is quite good. And so yeah, we'll see what happens. I think that for the time being, until the Wednesday comes, which uh, yeah, basically I think on Wednesday and Thursday certainly the implied volatility of the options will be high. I expect that tomorrow, Tuesday, will be another quiet day. So we will try to take as much advantage as possible of this low volatility. And then on Wednesday, it's going to be still a normal day for us, a normal trading day for us. We will try to be very careful to avoid basically being put some shares. We'll always prefer to stay in cash and sell puts, because that give us much more flexibility than to select our strike prices and avoid any potential downturns or pullbacks when we already hold the stock. But for the time being, this is all. Feel free to leave your comments in the comment section down below. I'm also available on LinkedIn in case you need to ask me any questions. And of course, feel free to like the video and subscribe to the channel. And yeah, I suppose it's my hope that we will be able to reconvene during the weekend. I'm not yet sure, but as always, I will try my best to continue to deliver this this content to you, especially because we are approaching the $50,000 mark, which is a very significant milestone for this challenge. Yeah, and I'll see you there.